Welcome to the Capital Exchange. I'm Steve Wilbur, Managing Director at Allen Capital Group.
And I'm Travis Portwood, Chief Investment Officer with Allen Capital Group.
Travis, we have not done one in a while, so let's talk about a few interesting facts or statistics that may surprise people.
Okay.
I'm going to go first. Rising interest rates.
Oh,
have you heard that before?
I don't think that surprises anybody.
Are they helping or hurting companies today? It seems like a ridiculous question. However, non-financial corporate net interest payments across the economy are actually lower. And here's why. Prior to the interest rate hikes, companies aggressively took advantage of the low debt at far lower rates. Now, however, any cash that is on their balance sheets then
Earns a higher rate.
it earns a higher rate. So paying less in debt, you have outstanding earnings more on the cash that you have at the banks.
Yeah, in Microsoft, here's a great example, Steve. You know, last quarter, their interest paid, that was around $492 million.
It's a big number.
It's a big number, but it's basically the same as last year. But interest earned on their cash jumped from $552 million last year to $905 million this year.
Even a bigger number.
So borrow at low rates, invest and get higher rates, right? So, but since we're speaking about debt, Steve, people may be surprised or they may not be, but U.S. national debt has actually ballooned recently. Have you heard that?
Yeah, just a little.
Yeah, so
some.
So we just crossed 33 trillion for the first time in September. The scarier part of that, or what might be the scarier part of that, is it only took 92 days to move from 32 to 33 trillion. So 1 trillion in 3 months is what we added there. So maybe even scarier, over the past 5 years, we've seen U.S. debt grow from 21.5 trillion in 2018 to 33 trillion. It's a 54% increase over a 5-year time frame. So the question will be, how much growth or how much are we borrowing from the future with that much debt?
Probably quite a bit.
Quite a bit.
Yeah, Travis, and maybe another surprising fact, I own a Peloton.
Trust me, we all know.
and I think it's a great product, but great products don't necessarily make great companies. And even great companies at the wrong price can make a poor investment, okay? Peloton is a stock that is currently down 97% off of its highs of $167 per share. 97%.
Yep.
So a $50 billion company in 2021 today is worth right at about $1.7 billion. If you bought it into that frenzy, you paid the price if you've held on to it all the way through it.
Yeah, it was being priced like everyone was going to work out at home forever.
Yeah, it was ridiculous.
Yeah, so last, Steve, let's talk about real estate. It's today's buzzword. And then the buzz real estate market is San Francisco. Yeah. So in San Francisco's financial district, you had 60 Spears Street office tower, and it recently sold for around $41 million. That's about 62% below its sale price back in 2014. And that price decline is obviously a symptom, I think, of the 32% office vacancy rate in San Francisco currently. And that might even be, the vacancy rate might even be higher than reported.
Probably.
What's going on.
Yeah.
So, but that's the headline most people think of when they hear commercial real estate. They think office buildings in San Francisco. But the commercial real estate market isn't just office buildings, and it isn't just San Francisco. There are other opportunities in real estate that could make sense in today's market. It could be the growing demand for multifamily. You've got a lot of people who don't want to own anymore. They want to live a nicer life. Or it could be demand for infrastructure. We still have a lot of goods moving around the country. They need to be stored. They need to be transported. But those stories, they're not front page stories. They're not going to grab headlines. They're not going to grab eyeballs. So remember, when you're reading the stories on the headlines and the buzzwords, that's not the entire story. There's more underneath there.
That's so true, Travis. This has been great. I look forward to it next week.
Look forward to it as well.